Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a great weekend. Last week was a crazy week in the global markets. The Russian stock exchange didn't even open last week, and we saw the knock-on effects of the Ukraine-Moscow conflict rippling throughout the currency markets. But despite that, the scorecard still highlighted 7 out of 9 Forex pairs that we looked at last week correctly, and if you add in gold and silver, it takes it to 9 out of 11. So despite all of the craziness last week, the scorecard still put us on the right side of the markets 80% of the time. So as always, we're going to have a quick look at the economic calendar because we had a couple of interest rate decisions last week, and we also have some interest rate decisions coming up out of the EU, out of the US. We're then going to look at the scorecards before moving on to the individual currencies and looking then at the currency pairs which are setting up as the best opportunities heading into next week. And then we will finish, as we always do, with stocks, gold, silver and Bitcoin. So a couple of key events from the week just gone. We did have an interest rate decision out of Australia, and we also had an interest rate decision out of Canada. And we saw the Canadian Central Bank raising interest rates last week from 0.25% to 0.5%. If we head over to this week, what's coming up, we do have an interest rate decision out of the EU. So the Canadian pairs and the Australian pairs, these are going to be good pairs to look to trade this week and heading into next week because we've already had the interest rate decision, so they're not going to be held up in the same way that the Euro pairs might. And when we're looking at the currency scorecards, we have to take into consideration the interest rate decision on Thursday, because you might find the Euro pairs don't really do much or move until Thursday. If that's the case, it will be better to look at the Aussie pairs, maybe New Zealand, maybe even the pound pairs. And if we just jump 1 week ahead, so not this coming week, but the following week, you can see we do also have FOMC coming up in 2 weeks' time. And we also have an interest rate decision out of the UK coming up as well. So quite a bit of data coming up over the next 2 weeks. But really, just to take into account this week is that Euro interest rate decision on Thursday. It does mean I would prefer to allocate my capital into other markets outside of the Euro. And if I am going to trade the Euro pairs, I'll just maybe take a trade in the Euro pairs rather than multiple trades and get tied up in a currency which doesn't do anything till Thursday. So that's really the only thing to take away from the economic calendar. If we have a look at the scorecards for the coming week, you can see the best scored currency is the Australian dollar. And this is very interesting because what we're looking at here is essentially a big risk-off event with the Ukraine-Russia war, which is going on, or the invasion of Ukraine by Russia. And in a risk-off scenario, you would expect commodity currencies to suffer. In a deflationary scenario, you see the Australian dollar primarily and the New Zealand dollar selling off hard against risk-off assets, such as the yen, such as the franc, such as the dollar. We're not actually seeing that in the scorecards. Although we have a big risk-off event, what we're seeing here is an indication of stagflation as opposed to deflation, because risk-off currencies such as the Australian dollar are actually very, very strong, or they're scoring very, very well. And this is, of course, we're looking at these scorecards here as a leading indicator for the coming week or for the coming weeks. And it's telling us that we should expect to see strength coming into the Australian dollar over the next week or so. And the reason for this is because although we have a risk-off event which is negative for growth, we are seeing a large amount of inflation because of the oil shock and the commodity shock that we're seeing in the markets as it currently stands. Because it's not just oil from Russia, you also have in Ukraine wheat and grains and other commodities which are also seeing their supply restricted by the ongoing conflict. And for those of you who did the free GMT courses, 100 free videos, you will know we covered the causes of stagflation, the implications of stagflation, and how to resolve stagflation within an economy. And for those of you who took the course, you'll know you have to go back and fix the root cause of the problem. So this is likely to persist all the while this conflict is ongoing in Ukraine. So heading into next week, I absolutely want to be looking primarily at long Australia. We also had the interest rate decision last week, which is great because it means we pretty much have a clear run in the Australian currency. And primarily I'm going to be looking at that against the Euro. Now the slight problem with that currency pair, although it's highlighted as the best pair, is we do have the interest rate decision on Thursday. So we'll have to treat that as an interest rate decision trade, and we'll be talking about that when we go through the charts. I do like, heading into next week, pound Aussie. I also like Aussie yen we're going to be looking at. And although these currencies really are just bullish to neutral and the yen is bearish to neutral, because this is bullish to neutral, bullish, strong bullish, and potentially overbought, and to the downside, bearish to neutral, bearish, strong bearish, and potentially oversold is what we're seeing here in Euro. Despite the fact that these are kind of bullish to neutral, I am still going to be looking at pound dollar to the downside, euro dollar to the downside because of how weak these currencies are, And we can also look at the New Zealand pairs, New Zealand yen to the upside, pound New Zealand to the downside, euro New Zealand to the downside as well. We are seeing a strengthening of the CAD, so if you really want, you could look at the CAD pairs. However, it's not quite scoring as strong as the dollar, the New Zealand, as it currently stands. And so I personally would prefer to look at Aussie, US dollar, New Zealand strength. But again, I wouldn't be surprised because of the oil shock to see the Canadian dollar start outperforming over the next 2 weeks. So we'll be keeping an eye on CAD longs, but for the moment, I prefer Aussie, US dollar and New Zealand. Okay, so let's have a look at the individual currencies, starting with the US dollar. We're on the daily chart here, as always, just to take a bit of a step back and see what's actually happening here in the currencies. You can see that this is trending to the upside. After the oil shock, we did have a rally, flight to safety in the US dollar, a lot of that coming out of the ruble. And we took out both targets to the upside last week. Heading into this week, I am still looking for further advances. I would expect this to pull back and head into the 99.00. So really, although we're looking at the scorecards, it's kind of bullish to neutral, there is nice momentum in this market, and it's one of the reasons why I do like US dollar long positions heading into next week. Next is the euro. The euro suffered from the rally in the US dollar last week. We took out the target to the downside. We were looking for further declines in the euro. Heading into this week, opposite to what we see in the dollar index, you can see we have nice momentum. So I would look for a pullback, possibly into the interest rate decision before further declines. So I like euro shorts next week, and it's highlighted in fact as the best short. The pound is also selling off, not as much momentum to the downside here as in the euro, and that's exactly what's reflected in the scorecards. However, we do look like we're going to come down further to the 1.3143. So I like pound shorts, and this really confirms what we looked at in the scorecards. The Swiss franc is essentially neutral, and in fact in the scorecards it's highlighted as bullish to neutral. So you can see there is nothing really here in terms of momentum. However, I wouldn't want to be short the Swiss franc, but I probably wouldn't want to be long the Swiss franc either. If you consider the dollar index, what we looked at just now, compared to the Swiss franc, you have momentum coming into the dollar. There is no momentum in the Swiss franc. So it's one of the reasons I prefer dollar longs over Swiss franc longs, despite the fact they both score bullish to neutral in the scorecards. Next is the yen, very similar to what we just looked at in the Swiss franc, but the other way around. We are currently structured to the downside, but we're kind of neutral, and it's kind of bearish to neutral, and that's exactly how it scores in the scoring system. So the scorecards reflect really what we're seeing here. And I wouldn't want to be long the Japanese yen, but I think there are better shorts like the euro, like the pound. Canadian dollar looks like we're actually forming an inverse head and shoulders. We took out the target set to the upside last week. And if we are forming a right shoulder here based on the oil shock, I would expect this to come back up, retake the 0.79420, and possibly move on to this high over here over the next couple of weeks. So again, you can see there is strength coming into the CAD. And in fact, you can look for some CAD breakouts next week. Look for a break of the 0.79420. That would be confirming an inverse head and shoulders in the Canadian dollar. And once this was confirmed above this level, this would be the start of a new trend to the upside. So look out for this move in the Canadian dollar next week. And although I haven't included the CAD pairs in this week's weekly Forex forecast because it hasn't quite broken out yet, I will update you as to the CAD pairs on Twitter. For those of you who follow me, you don't have to have Twitter. You can access my Twitter page throughout the week without being on Twitter. But I will update some of these charts throughout the week on Twitter as new information comes in and things start to change a bit. Certainly wouldn't want to be short the Canadian dollar with the recent oil shock. Australian dollar, really nice momentum to the upside. We actually took out all the targets here to the upside last week, which just goes to show how strong this was. I am looking for further advances, and this is my favorite pair, or favorite currency, I should say, not pair, going into next week. And I will be looking to pair this with Aussie long opportunities with the currencies that we're going to be looking at down here, like Aussie yen, but primarily pound Aussie and euro Aussie as well. So Aussie longs, further advances into the 0.7465, I think are going to be one of the most likely opportunities to make money next week. And if we have a quick look at iron ore prices, you can see we're taking out targets to the upside in iron ore. This is feeding into the strength in the Australian dollar, and it underlines that stagflationary scenario where we're seeing commodities feeding in to the Australian dollar, boosting the price, and again making it my most preferred currency to the upside next week. And finally, have a look at the New Zealand. The New Zealand is coming off the low. It's kind of V-bottoming here. We may be forming an inverse head and shoulders over in this area. However, I wouldn't want to be short the New Zealand dollar. Maybe we take the high over here and we start to flag like this. I am going to be looking at some New Zealand long opportunities as we start to move into a stagflationary type scenario, because as a commodity currency, this should also benefit alongside the CAD, the Australian dollar. And so although it's kind of bullish to neutral at the moment, and it's not as bullish as the Australian dollar, I will be looking at Euro New Zealand, Pound New Zealand, and New Zealand yen when we go through the markets today. Okay, so let's look at the markets themselves, and of course we cannot start without looking at crude oil. Last week I highlighted the fact crude oil was at a very key area of resistance, 95.58, and I do believe without the invasion of Ukraine this actually would have been a top in crude oil. I was hesitant to trade it to the upside whilst it was in this area. However, with the invasion of Ukraine, we had this massive rally in crude oil prices. This is a big supply shock to the global economy, and this is what's pushing the global economy into stagflation. So in terms of crude oil itself, the first thing to note is this is likely to be very, very volatile, so you need to be careful when trading this. If you're trading it with tight stops, you're probably going to get stopped out or whipsawed. But any pullback in this market is going to be viewed as an opportunity to look for further advances into the 119.75. And if we break through here, we're going to be looking up towards the 128.17. Just bear in mind, if you are looking to trade crude oil, aside from the fact that it could get very volatile, you may also find attempts by maybe the US, for example, to release supplies in order to drive down the price of crude oil. So you are going to be going long a commodity which is not only volatile if you buy crude oil, but you're also going to be going against the incentives of central banks and governing authorities around the world who want to see the oil price come down. So there is a risk of intervention if you are being long crude oil. So just something to bear in mind. If you want to play it safe, instead of getting involved in crude oil itself, you can look to trade derivatives of crude oil, maybe oil stocks, or for example, the commodity currencies that we're going to be looking at, Canadian dollar, Aussie dollar, and New Zealand dollar, etc. So we're not going to be looking at the Canadian dollar in this video. However, as I said, you can keep an eye on it next week, and I'll be posting any updates on Twitter if anything changes with the CAD pairs. So the first currency pair we're going to look at is EurAusd. And I have to say, this sell-off here, this is just insane. I mean, this thing is just moving to the downside almost in a straight line. And going into next week, I am looking for further declines. I wouldn't jump in right here, because any person who has sold up in these areas and has or is sitting on large profits is likely to cover any short positions to book their gains if the market starts to pull back. So you could see quite a sharp counter trend move, some short covering rally coming into this market. So buying at the lows here risks having that fly in your face. What would be great is if we could get a pullback first, if we got some short covering coming in as people started to book profits and you started to see the market correcting backwards, perhaps into Thursday. You may even find this market, because it's an interest rate decision week for the euro, corrects into Thursday, and then you get the breakdown like this, and that's your opportunity to look for continued move down into the 1.4652. So I do like EurAusd to the downside, but look for the correction first. And just bear in mind, it may correct all the way into the interest rate decision on Thursday. Next is Pound Aussie. Now, Pound Aussie took out both targets to the downside last week. And although EurAusd actually scores as the best currency pair, I think Pound Aussie is my favorite currency pair because we don't have the interest rate decision like we do with EurAusd. So any pullback, this is going to be my number one pair going into next week. Any pullback is going to be viewed as an opportunity to look for bearish reversals. And I'm going to be looking down towards the 1.7754. Next is Aussie Yen. Now, Aussie Yen is not highlighted as one of the best pairs purely because the yen is kind of bearish to neutral. It's not outright bearish like the euro or like the pound. What I'd like to see in Aussie Yen is any pullback into these areas down here, we start to correct. I'm going to be looking for bullish breakouts in this market, and I'm going to be looking up towards the 85.59. Euro dollar. Euro dollar is a really nice looking pair as well. Again, we took out both targets to the downside last week, and heading into this week, we have some really nice momentum in this pair. Any pullback in this market, and again, it may correct all the way into Thursday's interest rate decision, but any pullback in this market will be viewed as an opportunity to look for bearish reversals. And if we start to correct perhaps into the interest rate decision and then we get a sell-off like this on the interest rate decision, that's going to be an opportunity to look further declines into the 1.0781. Next is pound dollar. Now, pound dollar took out the target last week, and this was actually a really nice performing market. I posted this on Twitter as the market was in these areas that it looked like the pound was about to sell off, and this was a really nice trade last week. Going into this week, I am looking for further declines, and again, because of the interest rate decision out of the euro, I think pound dollar alongside pound Aussie may be the second best pair after pound Aussie. So any pullback in this market is going to be viewed as an opportunity to look for bearish reversals. down to the 1.3166, and if we break through here, going to be looking down to the 1.3081. Next is US dollar Japanese yen. Now again, this market is bullish and it is structured to the upside, but it's not highlighted as one of my favorite markets purely because you can see there is not a huge amount of momentum. We're actually a little bit corrective here, and that's because in a risk-off environment, US dollar, although the dollar is strong, it actually can sell off, or it has exposure to the downside in risk-off conditions. So I will be keeping an eye on this market next week, but it's not one of my favorite pairs. What I would like to see is, because we're kind of ranging between these levels down here, I'd like to see the market reverse to the upside first. I'd like to see some momentum coming into this market like this, and if that happens, I'm going to be looking at further advances into the 116.32. But as I say, the yen pairs are not highlighted as my favorite pairs next week because the yen is actually bearish to neutral. It's not outright bearish. So I much prefer euro and pound pairs because these are much weaker currencies than the yen. So they should provide better opportunities heading into next week over and above the Japanese yen. Next is Euro New Zealand. Again, this is just an insane sell-off to the downside. I mean, this is really something just to see the way this has just sold off without any corrections. We did take out the target as set last week. I was looking for further declines in Euro New Zealand, although the scale of these declines was quite surprising. Heading into this week, again, if you jump in at the lows here, you face having this snapback on any short covering rally. So I'd like to see a pullback in this market first. And any pullback, again, perhaps into the interest rate decision and then a sell-off is going to be viewed as an opportunity to look for further declines into the 1.5744. Pound New Zealand, we don't have the interest rate decision out of the pound like we do with the euro. So again, I would probably prefer Pound New Zealand over and above Euro New Zealand next week, especially if Euro New Zealand, Euro Aussie and Euro dollar just correct into Thursday and become interest rate decision trades. So you look for the breakdown on the interest rate decision before looking to trade it, and you trade the follow-through move. Well, if that's the case, it may be the pound pairs are the only ones which really move before the interest rate decision next week. So really strong momentum coming into this market, and we took out both targets to the downside last week. I was looking for further declines in this market. Any pullback in this market, I'm not going to jump in at the lows here, any pullback in this market, and it could be quite sharp, is going to be viewed as an opportunity to start to look for bearish reversals down to the 1.9104. And finally, we have New Zealand yen. New Zealand yen, again, not highlighted as one of the best pairs next week, but it is a market I'm just going to be keeping an eye on. Any pullback in this market, and I'd like to see it correct first, is going to be viewed as an opportunity to look for bullish reversals into the 79.23. So these are the 6 pairs that I like the best heading into next week. You may only get a chance to trade the pound pairs between now and the interest rate decision out of the EU next week. And it may be that the pound pairs start to move or provide opportunities at the start of the week, and the euro pairs provide the opportunities towards the end of the week when we have the interest rate decision itself. Okay, so finishing up with stocks, gold, silver, and Bitcoin. You can see last week the SPX really didn't do very much. We did come down, take out the target at 4169.22 and bounced. This is still structured to the downside, but as you can see from the previous lows here, we are starting to lack a little bit of momentum here. And although the break of this low last week was a major reversal in SPX, the question when you have this is this trend change the start of a new bigger trend or a primary trend to the downside, or otherwise known as an impulse wave, or is this an A, B, C for a correction? Is this a trend change which is just a secondary trend, a correction? And one of the ways to identify that is you want to really see a break with momentum below the lows, because that's what you see in third waves. That's what you see when you see all of the people covering their long positions, for example, pulling out, and this causes momentum to the downside. We haven't seen that with a breakdown below the low. So as it currently stands, stocks themselves are kind of in no man's land. They can really go either way from here. Obviously, the outlook with stagflation would be bearish for stocks, and I think that stocks may struggle to rally all the time there's no resolution to the Ukraine-Russia situation. So on SPX, I am still technically bearish, and any pullback as it currently stands would be viewed as an opportunity to look further declines into the 4169.22. But because of where stocks currently are, and because of the potential for an end of the Ukraine-Russia conflict over the next couple of weeks, I wouldn't want to be naked short stocks. If you like to day trade, for example, I would be day trading these to the downside in the SPX. But if you're more of a long-term trader, I would be net short as part of a long-short portfolio. Next is the Nasdaq. Now we're in a very similar situation to the SPX. It is currently structured to the downside, And again, we're really failing to break the lows over here with any real momentum. So we're kind of still in no man's land, although we are bearish, kind of bearish to neutral. Any pullback as it currently stands is viewed as an opportunity to look for further declines into the 13006.27. So again, I would be bullish on this short term, but longer term investors, the same with all of these stocks, I would be net short on these. Next is the Dow Jones. Now the Dow Jones is the only stock market here which has started to bounce and looks like it's going to reverse to the upside. Technically speaking, doesn't mean it's going to. So if you are looking to trade the Dow Jones, I would be looking for further advances in the Dow Jones into the 34,620. And of course, if the other stock markets were to sell off hard, this is not going to materialize, this is going to sell off. So what I quite like about the Dow Jones heading into this week, if you want to be long short, you can look for some long opportunities in the Dow Jones or stocks within the Dow Jones, and you could pair those off with the short opportunities in the SPX, in the Nasdaq, in the Russell. And I think that sets up quite a nice long short platform heading into next week. And of course, goes without saying, you don't have to get involved with stocks at these areas. If you'd rather wait for a momentum breakout, either to the upside or downside in stocks before you get back involved, that's fine as well. Nothing wrong with sitting on the sidelines. Next is the Russell. The Russell is still bearish, but as you can see, we're really failing here to break the lows with momentum. And if we break back above this high over here next week, this will actually be a double bottom reversal in the Russell. So I am currently bearish, but it's really slightly bearish to neutral. Any pullback in this market would be viewed as an opportunity to look for shorts once again into the 1892.45. Again, as it currently stands, kind of in no man's land here. And finally, we have the Nifty. Last week I was bearish on the Nifty. We came down and we took out the target set in the Nifty. Heading into this week, I am bearish once again, and any pullback in the Nifty would be viewed as an opportunity to look for further declines into the 15894.20. And finishing up with gold, silver and Bitcoin. Starting with gold, I've been highlighting this big breakout to the upside, a major breakout in gold for the last few weeks, really since the beginning of the year. I can't remember exactly when we started looking at this, but we did break out above the 1877.24. I said this was a major breakout in gold. We kind of got this whipsaw on the Russia-Ukraine situation, and we ended up coming and almost taking out the target at the 1973.26 from last week. Going into this week, I am bullish on gold once again. Yes, we have a stronger dollar, but in this kind of stagflationary scenario, you can see both gold and the dollar rising together, as we have been seeing. So I am looking for it to take out the target set from last week first. Any pullback in this market after taking out that target will be viewed as an opportunity to look for bullish setups once again into the 2019.40. So really do like gold heading into next week. Gold and silver are top on my watch list, and in fact I will put these in gold because they are highlighted as two of my favorite pairs heading into next week alongside the 6 Forex pairs here. Next is silver, and silver last week took out the target set to the upside. I was bullish on silver last week. Any pullback in silver next week is simply viewed as another opportunity to look for bullish setups and bullish breakouts in this market. I'm going to be looking up towards 26.30. And last but not least, we have Bitcoin. Now, Bitcoin actually broke up higher last week, and if we zoom out a little bit on Bitcoin, you can see we're kind of ranging in Bitcoin. I do favor long positions, and so any continued pullback in Bitcoin as it currently stands, I am going to be looking for any breakouts to the upside, and any breakouts to the upside in this market like this with momentum is going to be viewed as an opportunity to look for further advances into the 45,649. So that is it for me for this week, guys. It does look like we're heading into stagflation due to that massive oil shock to the global economy last week. So I do favor commodity currencies and also precious metals as well heading into next week. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.